All right, hey everybody, happy Friday the 13th. This is John Rothe at Riverbend Investment Management. Welcome to our weekly market update. This is for the week of January 13th, 2023. So let's dive here into the market. We've just finished our second week of the year, really our first full year of trading since the first day of the year was a holiday. And taking a look here, what's been going on in the market, we can see a lot of expansion in the market. This is our broad indices we follow. And you can see just a lot of green here on this matrix. We like to tell people to look at this as like a stoplight. Green means go, red means stop. And again, we have a lot of green here showing a lot of expansion in the market. You can see more and more areas trading above their 50-day moving average and even more areas trading above their respective 200-day moving average. This is a good sign because we typically look at the 200-day moving average as our trend, whether the trend is rising or falling. And you can see here just more and more areas starting to hit that upward rising trend again. What's interesting here is we've seen the gold area of the market, gold miners, gold stocks in general starting to take a leadership role here. Small caps are doing very well. International markets are doing well. Look down here, we have the US dollar. US dollar was really the big story last year. The strength in the US dollar was really causing a bit of a problem for investors. Every time the dollar rose, it impacted the markets negatively. And now we're starting to really see a decline in the US dollar as investors really don't want to be holding the US dollar at this point. And that is having a positive impact on stocks across the board so far. Looking at our individual sectors, same story here, just a lot more green, a lot more expansion in the market. We're seeing areas that really are kind of interest rate sensitive starting to pick up here. We're seeing real estate, obviously REITs doing fairly well here as people are starting to look past the Fed and starting to think maybe the Fed is getting closer and closer to ending this rate hike cycle that it's been in. Seeing consumer discretionary do well, which is a good sign because typically during rising markets, we see discretionary doing well, whereas in poor economies, we see staples doing well. So it's interesting to start to see investors starting to come into the discretionary area of the market as well. Looking at our just inflation data, this really has been a good sign for the market. As you can see here, inflation data is starting to really fall off fairly quickly now. For a lot of last year, as the Fed raised rates, we didn't see a lot of change in those inflation numbers. Inflation was a bit sticky, but now that we're starting to reverse that trend back downward, a lot of the market is starting to wonder if the Fed again maybe has only one or two more rate hikes, and then like they said, they're just going to keep the rates high at this current level for a while and then wait for the inflation data to start showing closer to their target numbers before they start kind of taking their foot off the brake, as you will. Looking at the S&P 500 chart, a lot of lines here drawn on this chart. I'm going to walk you through everything here. The big area to focus on is this red downward trend line here. As you can see, every time we've hit this area of market here with a yellow circle, every time we've hit this trend line, the market has reversed. And we can see again here, we saw really this year-end rally that we were hoping to break through this trend line, again, got rejected by this trend line. It almost acts like a brick wall reversing the markets. Well, here we are again. We're right at that trend line again, but something's different this time. As you can see in the past, every time we've gotten near this level, we've had these sell signals. So we've had an established buy signal, and then the sell signal kicks in right as we get to that level. Again, established buy signal, sell signal kicks into that level. Established buy signal, sell signal kicks in that level. But what's going on right here is this time around, as we get to this line, we are just starting to see a new buy signal form. So something a little bit different, because in the past, as we've hit this trend line, we've had a well-established buy signal already. So this is interesting that we're hitting this trend line and we're starting to see buy signals start to flash. Again, maybe an indication that the investors want to push this market higher, but I wouldn't be surprised to see a little bit of volatility around this level as investors try to figure out which side of the line they want to be positioned on. Again, I think if we can break above this trend line here, we're going to see a lot of money come off of the sidelines because a lot of investors are keeping an eye on this downward trend, and a reversal of that trend would be a positive sign. I think you'll see a lot of investors want to try to get in as early as possible, and we could see a fairly strong thrust upward once this trend line is broken. Looking at the longer term picture of the S&P 500, this is a weekly chart, and what I've marked here is the 200 period moving average on this weekly chart. And you can see in the past it's acted as a very good level of support for the markets. When that level has been broken, we've had these fairly steep declines in the market. This time around so far it's been holding. So again, I think as long as we can hold above this level here, I think that's a positive sign for the market. It may provide some opportunities and some interesting values for investors to kind of take a look at these areas in the market as we're above this level, because again, there may be some interesting opportunities to take advantage of. But I think if we break below these levels, then we have to start talking about these more severe declines as a potential for the market going forward. Looking at our percentage of stocks above the 50-day moving average and above the 200-day moving average, again, a lot of strength here in the market. We're seeing a 50-day moving average. These numbers are starting to rise, which is a good signal. I've marked here where periods where we typically see a kind of a topping or an overbought level of the market. We're not quite there yet, but we are at elevated levels. Again, we can stay overbought for quite some time, but just something to be aware of that I think stock selection is going to be important here, and you don't want to overly chase anything that's looking a little extended here. But I think there is still some opportunity here in the market. And again, here you can see typically where we tend to bottom out here in terms of these shorter term signals. Looking at the longer term trend of the 200-day moving average, we do have a good signal here, a good sign. We had this downward trend again that really lasted since for most of last year, going back to really mid 2021, and this just weakening where we had more and more stocks trading below their 200-day moving average. Well, that trend seems to be starting to reverse again, which again is another good sign that investors are starting to maybe take a longer term approach to this market and starting to focus on some of these longer term trends, and they're starting to push those longer term trends more in that upward direction again, which again is a good sign for the market. Looking at our small caps, this is the Russell 2000. Again, a very similar picture where we've had this downward trend line, and it looks like we're starting to try to break out here. This is a little bit more of a greater breakout than what we saw at the S&P 500. Small caps seem to be leading the market so far this year. And again, we have this newly established buy signal as well. So we want to keep an eye on the small caps as well, because investors tend to be a little bit more aggressive when they're taking these small cap positions. So if we see leadership in this area, again, it's a good sign that we're seeing those more aggressive investors come off the sidelines, and they want to take opportunities as they present themselves in this market. Small cap leadership has been presenting itself as fairly strong again this year. We saw for a lot of last year, we saw this rising trend in leadership. As this blue line is rising, it's indicating that small caps are outperforming the S&P 500. And again, what we're seeing so far in 2023 is this leadership emerge in small cap names, which is interesting to see, because a lot of investors, I think, are overweight these large cap names. And if this tends to be a multi-year trend where we see small cap leadership, something similar to what we saw in the early 2000s, we might see a lot of investors are kind of left behind as small cap leadership takes in, because again, I'm finding not a lot of people have a lot of small cap exposures in the portfolios right now. Taking a look at value leadership, value again keeps seeming to pick up here in terms of leadership. We have here is just a comparison between the S&P 500 value and the S&P 500 growth. As you can see here, when we have this rising line here, this rising blue trend, it means value is the leadership area, values outperforming growth, which is what we really saw in the early parts of the 2000s. After the great financial crisis, growth took over really a leadership area. You can see value underperformed growth numbers fairly significantly. And we just saw this long-term phase where we saw value really significantly outperform growth. Now, it seems like maybe that trend is starting to, again, switch over a little bit, which makes sense, because typically when you have fairly large market declines, you get some type of change in leadership present itself. And we might start to see a period of time where value starts to take over, which again, after such a long period of time where we had growth leading the market, there are some, I think, good opportunities within the value side of the market. So again, we might start to see investors start to pick up those value names going forward too. You can really see this emphasized fairly well here. Again, this is just the value, the S&P 500 value in the red. The S&P 500 growth in the red and the value in the blue. And I've marked here the start of 2023, and you can just see where the strength is in the market, how much greater this outperformance is in the value names versus the growth names so far this year. A lot of this is being driven by the US dollar. US dollar, again, has been declining. We are at an interesting level where we are a bit oversold here. We have a bit of a divergence here, which indicates sometimes you get a reversal trend when you have a divergence like this, where you see a rising MACD, where we have a falling decline in price. Typically, these two should line up, and when you have these negative divergences, it's an indication that something might switch over. But we're at an important level of support as well. well. We're fairly oversold. So we might see the US dollar try to bounce around here a little bit, maybe try to bring up some type of short-term rally. But I think, again, if we're looking at some of the macro indicators that are out there, especially globally, I think that will maybe be short-lived, and we'll just see kind of throughout the year a further decline in the US dollar. Again, here's this story from last year, that rising US dollar having that negative impact on stocks. And now we have that declining dollar, and we're starting to see improvement in stocks. So I think, again, we might have a little bit of bouncing around here at these levels for the US dollar, which might add a little bit of volatility with the S&P 500, especially since we're down by that red trading line, that downward trend line that I talked about in the beginning. So something to keep an eye on that we're going forward over the next couple of days, next couple of weeks, to see if that US dollar, if it rallies, if it has any type of lingering strength, or if it's more just of a short-term bounce, and then we start to see people again take that opportunity to sell their US dollar holdings. So that's it for this week. If you have any questions, best way to reach out to me is by email at john.rothe@riverbendinvestments.com. You can follow me on Twitter, and I have a research blog that I post a little bit more detailed post as well. Just a bit of a housekeeping note. We have been kind of slowly refreshing our website here. So if you go onto the website to look at the research tab, you'll notice it looks a little bit different. So don't worry, nothing has changed structurally with the firm. We are just refreshing the website so you are at the correct place. So that's it for this week. Thanks so much, everybody, and we'll chat next week. Bye-bye for now.